One, and we are rolling. Good morning. Good morning. Happy Momentum Monday. This Monday, I almost said November, but it's actually December 9th, 2024. We missed the last few weeks. My family got some sort of bug. We talked about Disney World last time. We brought something home with us that wasn't just the van full of toys and trinkets. And so we were down for a week or so. Not fun. But anyway, we were back. And so we are doing another Momentum Monday. We only got a few more of these left to the end of the year. And then, maybe the new year we'll introduce a new look. So anyway, I'll let you get into the fine print and then we will get into it.
Yeah, absolutely. Hope everybody is getting ready for a wonderful Christmas. But of course, as we do all these videos, keep in mind that none of it is to be considered individual investment advice. Always reach out to us about your specific situation. Let's get into it.
All right. So looking at the rewinding of financial tape for the last week, S&P up a little under 1%, 0.99, NASDAQ up 3.36%, Dow Jones last week down 0.5 point, Russell 2000 down 1%. We look at a 1 year on those, S&P is up 35.75, NASDAQ up 41.4, Dow Jones up 26.1, it's the laggard this year, and then Russell's up 31.89. So you can see how much the Russell has been working over time to kind of, it's almost caught up to the S&P, which is kind of impressive.
Yeah.
Let's look at commodities. Gold down 1% last week. Gold's been having a rough time the past few weeks. It's still up pretty good on the year, and we'll look at that in a minute. Silver up 1.18, 10-year bond up 0.39, Bitcoin up almost 4%. And then on a 1 year, S&P up 35. Oh, I already said that. Let me get the other one. 1 year gold up 30.87.
That's impressive.
Silver up 33.89.
Yeah.
10-year bond is up 5%, also impressive because of where we came from in the beginning of the year. And then Bitcoin up 109%. Yeah. And I think that's actually, I think that's low. I need to check that. Bitcoin may be up a little bit more than that. Bitcoin had an interesting week last week. That's as good as place as any to start.
Bitcoin is up. Well, it depends on the day that you pulled the data, but if you go January 1, 43, so 100, it's 100 and you said 109.
Well, that's a specific holding. I think that's BITO. I think is the holding.
Okay, yes,
that's not the actual spot price.
Yeah. So you're looking at the year to date is I think 125.
Yeah, it's done well.
Yeah, it's done well.
Last week we had sort of a banner week. We reached 100,000.
Yeah.
In the value
of Bitcoin. Let's chat about that real quick.
We quickly fell below that. I think we're below that now.
So as people, I would assume now because, that 100,000, that magic 100,000 number has produced a lot of interesting stories in the media, bringing people's awareness to Bitcoin and the broader crypto space. So one thing we have to keep in mind is that as this cycle, which Bitcoin operates on a 4-year cycle, as this cycle plays out, as we enter 2025, which is probably going to be the chance of 2025 having greater returns,
knock on wood,
for the broader crypto space than 2024 is pretty significant. But, you will notice in your portfolios as we go throughout next year, there will be rebalancing. Profits will be taken on our crypto positions. And you're going to see that happening while the media is talking about Bitcoin going up to the moon. And so I have no doubt Bitcoin will reach $1 million per token at some point in time. But that's probably going to be 4 to 8 years from now.
I think I saw like 2036 or something. Yeah. was a speculation where it would reach that.
Yeah, I mean, I think that's that.
It's a growth asset.
Correct.
Which is what
it's maturing, but we know there's going to be. We're going to go to 150. We're going to go to 200,000 Bitcoin, and then it's going to pull back to 60.
Yeah.
And so we're going to with our technical data, with our knowledge, we're going to, gently increase and decrease our exposure as we walk through this cycle, so our clients ultimately end up with a much greater return than they would otherwise have by just not rebalancing. And so we treat it just like we do gold and anything else. We're going to rebalance and sell into the strength, and we're going to rebalance and buy into the weakness, so that your total return continuously increases throughout the cycle. So,
and that's not something that's specific to Bitcoin. That's
no, it's
something
just
that we've done
it's
with
more
stock picks.
It's more
things like that.
The S&P's up 35%, which is great, but when something's up 130%, it's just magnified.
Right.
Yeah, and then FOMO. This is going to be the first.
Well, you've had
cycle. We're going to have FOMO like never before.
Well, you've had a period of time here,
like
the whole summer, basically up until now, where Bitcoin's just been sort of trading sideways ever since the halving. We have this time period where it hasn't really done much. It's come and it hasn't really affected the portfolios negatively either. It's just sort of kind of traded sideways. But yeah, when you get big headlines like this, Bitcoin reaches 100,000. We would not be surprised if it has pulled back a little bit. The question is, how much is it going to pull back before it starts to march forward again?
Yeah.
And, that's just something we have to kind of sit and wait and watch.
So what do we look at now? As let's say another 100% gain is in the books between now and this time next year. Where are we going to be looking at other areas of the crypto space to give our clients exposure to, better gains than that potentially? That's something that we'll have more to say on as the year rolls out. Some of it is
ongoing conversation.
Yeah, it is.
Well, we're already in Ethereum.
We have
Bitcoin and Ethereum, which are the top two. When you think about crypto space, those are the two you think about most of the time when you're listening to CNBC or whatever you're listening to, Fox News, Fox Business. Those are the ones they're talking about. So we have exposure to those. We have exposure to smaller coins on a very, very smaller. We have a holding in the portfolio called GDLC, which is a large cap digital.
Yeah, it's got a 6 or 7 total, but it's mainly Bitcoin
small.
and Ethereum. But then
that's right.
It breaks down.
And so my question, I'm curious as to how that makeup will be going forward as they start taking profits from that position themselves. And then there's also other coins and tokens and assets that we could look at. That the catalyst really is going to be, now that we know that Trump is going to get a second term and January 20th starts his term, his next term, as he nominates, you've already started hearing him talk about these pro-crypto people that he's nominating cabinet positions. SEC chair, Gensler's out. The guy that coming in, I forget his name, but he's very pro-crypto.
Yeah.
And so what is the environment going to be like now going forward for these, this crypto space? And it's going to look more like, Bitcoin and Ethereum had their spot ETFs approved. What's next? That's basically the conversation.
And then how are we able to access it in regulated products?
Right. That makes sense to do.
Correct. Exactly. Yeah. So we have access now to probably a dozen products, but the problem is that there's a difference. A lot of our clients will remember us talking about when we opened up our position in OBTC, Osprey Bitcoin Trust, which is now being converted to IBIT.
No, not IBIT.
What is it? The VanEck? Is it VanEck?
No, it's Bitwise.
Bitwise.
And I can't remember what the ticker for it is.
BitW.
Something like that.
BitW, something. Yeah. And so, our biggest, even though we knew we were early in the cycle, we were able to purchase those shares at a significant discount to what the actual value of the underlying asset is. So now, as we enter bull market, a lot of those products are trading at premiums. And so there's no reason, so we're going to wait and be patient. And not necessarily we have to buy at a discount, but we don't want to buy a premium because then the return of that underlying asset has to be so much more to make up for that. So,
and a lot of I think all of them we went into had a discount. And I think they all closed now.
Yes.
Ethereum, GDLC, and
GDLC
OBTC.
Last I looked Friday, I think it was like an 8% marginal.
Yeah. Small.
Yeah. So great, exciting things. One other thing I saw that's kind of moving the topic here a little bit was, confidence in the consumer plays a big part of economic outlook. We're a nation built on consumption. And so when the consumer feels more confident, they're going to spend more, which produces a better economic output, which becomes a self-fulfilling prophecy. I saw today that the household finance outlook has hit its highest since February of 2020, meaning that we have now hit the highest since before COVID. The stuff with COVID started in March of that year, and that's from a New York Fed survey that's out today. So that's really good news, especially on the back of the incoming Trump administration. We know at some level there's going to be a reduction of government spending. And so it's very good to see the consumer have a lot of confidence, because that's going to give the government the ability to really reduce spending if economic activity increases. Because government spending, the Keynesian outlook on things is government spending helps economic growth. Well, it does in certain short bursts, but over time it becomes a burden. Those interest rates keep going up, and the federal government has to pay a higher interest on their debt, which means they can't spend money on anything other than paying essentially the Chinese government that's holding all of our treasuries interest payments. So I think that's really good. So I think that's a positive catalyst for the market going into next year. It's kind of a tea leaf that you can read, that things are the wind is at our back from a market perspective. And that's good. That's great. Now, interest rates for mortgages are still way too high. So, anybody out there that's looking to purchase or refinance, unless there's some really good incentives coming at you from builders, I would still hold off on that until we get into spring or summer of next year to kind of see what's going to happen with these mortgage rates. But like you said, with the 10-year, the yields at 4.19 today. And if we look, it basically had a double top if you look at the technicals on it. So that would lead you to believe lower interest rates are coming for credit cards and
auto loans,
mortgages and auto loans, credit cards. Yeah.
Yeah. I mean, your used vehicle loan is still 10%, close to it.
What else you got? I bought a Tesla.
Congratulations.
I have to say, full self-driving it's unbelievable. It's otherworldly. I left the center of Atlanta last night, Midtown, as it's referred to, and did not touch that steering wheel all the way to my driveway through all that traffic. It was impressive.
Well, I mean, if you're going to be driving through Atlanta, that's one way to do it.
Yeah.
How often did you have to stop? Or you stopped traffic? One. All right. Sorry about that. We had some technical issues with a camera. So, anyway, we picked up at you were in Atlanta.
That's with full self-driving.
But I don't think this camera's going to last much longer.
No.
So we're going to wrap this up pretty quickly. Only thing we have next week going on is CPI and PPI, or this week actually, rather, Wednesday and Thursday, I want to say.
Yeah.
And so we will see.
And next week,
see what happens.
Fed meeting, right? Of course, that's not this week, but this information will go into their rate decision, which most people anticipate it to be another cut.
Yeah. Oh, the jobs numbers too, which we don't put a lot of stock into because
it's always revised.
But those were decent on Friday. So, yeah, I mean, that's pretty much all we got here. I know that we have a few more weeks to the end of the year. And then, of course, Trump takes office in January, on January 20th, for the end of January. So, there's a lot of questions around what's going to happen when he takes office. There's a lot of policies, and it's been interesting kind of see who he's nominating for these positions. A lot of people that are in the business world. I'm not crazy about all of the nominations, but I think by and large, the majority of them are pretty good. There's some questions surrounding tariffs and how those might work. Typically, we see Trump historically has used those more as kind of a leverage point and a negotiating tactic rather than an actual policy direction. But his Commerce Secretary Howard Lutnick is appointee there. He has a very interesting. There's a YouTube video of him on CNBC talking about tariffs and about the fact that, you know, how their thought process is when they're thinking about tariffs, and it goes back to like the Marshall Plan and the fact that, you know, American car companies can't sell cars overseas because of the tariffs, like 100% tariffs or something. So there has to be a situation where we come to a negotiating table and don't allow that to be the case. Here we are, you know, 60, 70 years removed
after rebuilding
Europe after the war. And so, you know, it's an interesting conversation. If it's on CNBC, sure, it's on YouTube, the clip. I would look that up and
it's good. I mean, it's a negotiating tactic. So, you know, we're looking at, okay, how are the markets going to react? It's going to be interesting to see how it unfolds. I think the most impactful to the markets in the near term is the tax cuts expiration that'll be renewed.
We'll have to know more about that.
Yeah, we'll have to get more data onto what that's looking like. But I'm already seeing S&P targets being raised next year, well over 7,000. So that's a 20-25% upside, regardless from the policy changes and with the election and all of that. Generally, the first 3 years, sequentially, 12 months, rolling 36-month period after the beginning of a new bull market, always has double-digit returns, ranging from 15 to 35, 40% each year. So this is kind of in line with that. You know, of course, you have your policy changes
from everything else.
Yes.
There's a whole bunch of variables that can come in.
Correct. That's just if you look at it historically and average it out.
Black swan events, wars, you know, things that are outside of the control. But just technically looking at the market the way we do.
Yes.
But, you know, it'd be interested to see what happens. And of course, we'll talk about it as it comes into play in real terms, in real time. We'll kind of give our thoughts on what sort of policy directives would be. Not that we, you know, can do anything about it, but
you can't do anything.
We're constantly watching the data. We're looking at all of that. We've had a great year so far this year. We hope to have another one next year. By all accounts, we think it is going to be, like Matt said, but we're constantly watching. We're constantly making changes. You know, we're going forward. In January, we'll be making some more changes to portfolios. We'll be rebalancing. I had a new client come on, and I was looking at their 401k, and we put it in our system, or I put it in the system over the weekend. The way that 401k advice works is it's generated over a weekend cycle. So when I put it in during the week, it'll generate new advice. So when we have these clients come in during the middle of the quarter like this, it's an interesting kind of barometer for us to look kind of forward looking, because most of our clients have had their advice, you know, in October, and we don't really revisit that until January. But when we have somebody come in the middle of the quarter, it's a new plan. We look at that, and the advice, the recommendations that we got back through our system that we use for that is in small cap now.
There we go.
So I think that that's probably going to be something we will see in January.
Yeah.
So this is the first time we've kind of seen that, and it speaks to the Russell 2000, you know, almost matching the S&P, and it very well could by the end of the year, depending on how the next few weeks go. It could really do well. Small caps tend to have a really good first part of the year. That's really when small caps shine. So we'll be kind of looking out for that. But, you know, if you have any questions or any concerns, want to talk about anything, please let us know. As always, you know, the first of the year is our time for annual review. So that season is coming up soon. You'll be hearing from us to schedule your annual review. That's, of course, not mandatory. We do like to talk to everybody at least once a year. We try to do it at the beginning of the year, the first quarter. But we definitely like to reconnect and just kind of talk about your situation and see if there's anything else we can help. Also, if you're not participating in the 401k advice, we do offer that as a service for our clients. We kind of tell you how to allocate the 401k every 90 days. So the next time frame that we will do that will be January 1st. So if you want to get on board with that and you're not currently receiving that advice, shoot us an email. We'll get your options, upload those, and take care of that for you. Anything on your end?
No. We'll be back next week and continue to watch the data and the markets and keep looking, that Russell 2000, that higher confidence level we need to allocate at the beginning of the year. But just some hopium, for everybody. If you're looking at the S&P gaining 20-25% next year, and the small cap, the Russell 2000 does what it normally would do in that environment, you're looking at 40, 50, dare say 60% upside potential. Exact same thing happened 2017, 2018. So we'll see. A lot of exciting things, and it's good to have a plan. It's good to work with professionals such as ourselves that know how to analyze the data, to allocate appropriately, to give you good risk-adjusted returns, whether it be in the 401k or in the accounts that we manage here in our models. So we're entering some exciting times, and we're going to keep doing the hard work to produce good outcomes for our clients.
Sounds good. Well, if you have any questions or any concerns, please reach out. We will see you guys next week. Hope you have a great week, and we will be here next week.
All righty. Take care.
All righty.